A stop loss is a preset order to sell a holding automatically when it reaches a certain price, helping limit your losses in market. Stop loss is one of the most important trading terms. It refers to a price point beyond which your own view or the view of the research analyst you are following may no longer be valid. For example, suppose there is an advice to buy XYZ Limited at 100 rupee with a target price of 110 rupees and a stop loss of 95 rupees. This means the price action is expected to be bullish and the stock may go up to 110 rupees. However, if the price drops below 95 rupees, the view may not be correct. In that case, you are advised to exit the position to stop further losses. Why is stop loss important? Stop loss is crucial because it separates trading from speculation or gambling. As a trader, following proper stop losses, either based on research, chart analysis, or other strategies, helps you control risk effectively, avoid holding on to falling stocks unnecessarily. How to place a stop loss order? Let's assume you have Reliance shares in your demat account and you want to place a stop loss sell order for them. Step 1. Select Reliance and go to the sell order section. Since it's a stop loss for 10 shares, enter the quantity as 10. As you can see that Reliance is currently trading at 1240 rupees, and let's say you want to trigger a sell order if it falls to 1200 rupees to limit your potential losses, then you need to set up a stop loss order. Now, to set up a stop loss order at 1200 rupees, do not enter 1200 rupees in the limit section, as that would execute the order immediately if the current price is higher than 1200 rupees. Instead, enter 1200 rupees in the trigger price section. This means the order will only be activated if the price drops to 1200 rupees. In the limit price section, you can either enter 0 or enter a price significantly lower than 1200 rupees, as this will set a limit order and execute as a market order when triggered. This is how you place a stop loss sell order for stocks you already own. Now, if you have a short sell position, the stop loss works opposite. The trigger price should be higher than the current market price. The limit price can be 0 for a market order or slightly higher than the trigger price.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.